Edwin Paul here. Today I'm going to be making a series of videos. It's going to probably take over the next 5 videos, but it's going to be kind of a layered video where each video I talk about something that adds on to the previous video. So it's important to watch the next 5 videos as I talk about a kind of a formula to kind of how to set everything up as far as indicators, at least my method, with the 5, 8, and 20 method, and how to be successful doing that with whatever you choose to be doing, with whether it be Forex, futures, or stock market. So watch the next 5 videos because all these videos are going to be related to each other. They're all going to cover kind of the same thing, but each video I'm going to be elaborating a little bit more. Today I'm just going to be going over the 5, the 8, the 20, and what to look for when you set up these moving averages. Okay, so what I'm going to be doing with my videos is I'm basically going to be showing you how to set everything up to kind of look like this with the moving averages and how to get these buy and sell signals here. But today I'm not going to be talking about that. Today I'm just, stay tuned for further videos. So I'm kind of going to show you guys how to set everything up and how I set everything up. And today I'm going to be going over basically how to set up your moving averages. Now most of you watching probably have the free account with TradingView. So the easiest way to do this is to go and look for your 3 smooth moving averages. And this is the one you want to bookmark, this one, because you'll be able to put 3 moving averages in one indicator. So it doesn't clutter up your free account, because you can have 3 moving averages into one. So you have room for the other 2 indicators that we're going to need. I do have stochastic RSI, and there's also Algo Pro, which I'm going to go into in future videos. So because we use the 3 smooth moving averages, it allows us to have those other 2 indicators as well, because it's needed. So let me just show you really how to set it up. It's real simple. Once you set it up, you want to go to your inputs. You want to change it to 5, 8, and 20. You want to go to your style, and you want to make them colors that stand out. Now the whole purpose here, the 5 and the 8, the 20 you want to really kind of stand out in color, because the 20 acts as kind of a, I'll go into it, but it acts as kind of like, the point of these moving averages is not to make any moves, not to make any trades based off of the moving averages. The whole point of the 5, the 8, and the 20 is to see what the overall direction is doing. And you can really see it real clear. So you see that my 20 is this light color right here. It really stands out. So what you want to look for is, once you have this set up, you can look for different things. So we'll look at a couple cryptos, because what you want to look for first, and the first thing we want to look for is having this set up will kind of show you the time period of when everything is going sideways. So there's going to be times when after there's a big pump and it settles down, it goes a little bit sideways. You'll notice that there's a sideways motion that goes on, and that's when all the moving averages are close together. They're kind of jumbled together. They're not really going up and down. They're all just kind of forming a straight line. When all the moving averages come together and kind of form a straight line, that is a consolidation period, and that is not a recommended time to do any trades, at least in my opinion. So to look for those moments, and we can see if we can find any. We can see that happening right here. I could turn. Now I'm on MicroStrategy right now, but we'll look at Bitcoin. Notice the moving averages are jumbled together. These are not a time to go do any trades, because it shows a consolidation period and the market is going sideways. So let's just see if it's happening again, if we can spot any other times that this is happening. You most likely might find this more with Bitcoin because this is MicroStrategy. Probably doesn't do it as much. So let's just go, let's go look at Bitcoin real quick. Okay, so what we look for with Bitcoin is there's periods of big moves and then it consolidates. So that happens a lot. You see it very briefly here, and I am on the hour, so you see it kind of briefly here. And let's see if we can find any more. Now these, which I'll go into in a couple minutes. Here's a good moment right here. You see how all right here, this moment right here, that you could see. Look at this entire time right here. I'm going to rewind this and show you. But look at this. Starting from this point right here, you see everything kind of flatlining. I could turn back on the candles and we'll see what I'm exactly talking about. All the moving averages are kind of flatlined, and you see that here with the candles. This is a sideways period, and this is not a recommended time to do any trades. And you can see that with the moving averages. So it happens for a long period of time. And you know exactly, using these indicators, these moving averages, you'll know exactly when it is breaking out. You'll know when it's consolidating, and you know exactly when it's breaking out. So the next thing you want to do is you want to look for moments in the moving average when they start crossing. This is the next thing you want to look for. So if you notice right here, you'll see that it breaks out of sideways and then it starts going. Now all the moving averages start going up. What you want to look for a trade, what you want to look for in a trade to the upside is when the moving averages come out of this sideways action and then you see the moving averages straightening out. Now if this orange line was crossing down with this other line here, that would not be an entry point. That would not be an entry point. This is a period of uptrend, and I can prove that. I'll turn back on the candles. You'll see from here, from the point it gets out of sideways, you'll see that the moving averages started straightening out, and because they straighten out, you'll see that the candles are starting to go in that direction as well. So it goes from sideways, you look at the moving averages, you see all the lines are straightening out, and this is an indication of doing a long or anything like that. But the moment any of these lines, now the 20 moving averages is only there to show you pretty much what direction it's going. If the 20 moving average, which is that teal line on the bottom, if the two lines are above the 20, that is a uptrend. If the two lines are below the 20, it is a downtrend. So what we can see here is a uptrend. So we don't see any problems if we look at the moving averages here. If we look at the moving averages, we see that it starts touching right here. This is an indication that it's going to start to go, it's going to have a reversal, it's going to go in the opposite direction. It's collapsing with the other. You want to look for all the lines. All the lines have got to be straight for it to be going in that direction. So when I said that the 20 moving average is when it's below the other two lines, it's a uptrend. So when these other two lines are above it, and they're going straight, they're not interfering with each other, it is an uptrend. But the moment they start touching, that is your signal that it's going to be starting to go in a reverse, that it's going to go in the opposite direction. Once it starts interfering with the other line, you know, you want to get out, because if we could turn on the candles and see that exactly what happened. The two lines are above the 20, that's a signal of an uptrend. And we see the lines are straight up until about this point right here. So that is what, that's kind of what happens. You could do this technique. You could do this technique different ways. The first thing is to do, you could figure out the sideways movement. You'll know when it's consolidating, when it's going sideways. You'll know when it's starting to go up when all the lines are going in that same direction. And you'll know when it's doing a reversal when the lines start interfering with it. So let's go find a scenario where it's a downtrend. Let's find an example of a downtrend. This is probably a good one. And the wider the lines are from each other, the bigger the trade's going to be. So just keep that in mind too. So right here we have the 20 that is above the other two lines. This is a signal of a downtrend. And what you see, the lines are they're not touching each other, they're going in the same direction, and they're even getting bigger. So this is a good move right here. You see that it keeps going on till about right here. So I'm going to turn on the candles. And we'll check it ourselves. We see that lines are going straight. We can enter our move. Now what I would do when I'm entering a trade, it needs to cross, and I need to see that the lines are going straight. Once I see that the lines are going straight, that is the point for me to get in. I don't get in at the cross. I get in when I see the lines are going straight, because that's only telling me that it's going to keep going in that direction for a while until the moving averages start interfering with them. So we can see that happening right here. They're not, the moving average, the 5 and 8 are not touching each other, and it is a clear indication of a downtrend that we don't see a problem till right about here. And that's personally probably when to get out, or you can get out a little bit sooner. But anyway, those are the three methods that I do with the 5, 8, and 20. You can find consolidation points. You can find moments when it's going sideways, and you can find the moments when it's going down. You can find the moments when it's going up. And this strategy alone is very, very helpful. It'll work good. It work good for futures. It'll work good for the stock. And it works extremely well for Forex too, but I'm going to go into that in future videos for this week. But anyway, if you guys like this video, make sure you hit the like button, hit the subscribe button. See you guys in future videos.